and welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Indexing is coming to dominate the investment world, and that means the people who control what goes into those indexes are increasingly influential. Our guest today, Dan Draper, Chief Executive Officer at S&P Dow Jones Indices, which publishes thousands of indexes, but more importantly, they decide what goes into the Dow Jones Industrial Average and the S&P 500. Tom Lyon, my old friend from ETF Trends, also joining us. Dan, the Dow Jones Industrial Average turned 125 years old this year. Congratulations. We have $13.5 trillion benchmarked or indexed to the S&P 500. Indexing and passive investing is winning over active investing in terms of money flows. Can you give us a sense of where this is all going? I hear the haters, the opponents of indexed investing, they're now complaining that we need active investors to make an efficient market or it's not going to work anymore. How do you think about all of this at S&P?
Oh, thank you, Bob. Look, I mean, it's been a long journey since Charles Dow, again, looked for a barometer of the whole economy and kind of created the Dow Jones Industrial Average 125 years ago. Where we're going today, absolutely a record year in ETF inflows globally and the U.S. The active to passive debate continues to move forward. Look, we look particularly who's benefiting? End investors. $357 billion, we estimate, $357 billion of lower fees have gone into the pockets of end investors of passive, the shift to passive from active. So we continue to see it moving forward, and we don't estimate that any market impact really until passive constitutes about 80% of the overall market. Today, it's 25 to 30%. There's a long runway, for passive to continue to grow versus active. 80%
is what you said. Now, that's a very interesting. It's the first time I've heard somebody put a number on that. We'll talk about that a little bit later. But we do have a new regulatory regime in Washington. I'm wondering if you met with Gary Gensler, the SEC head, or his staff, and what, if any, concerns they might have about this growth of indexing. Obviously, they're concerned about the growth of day trading. Is Gensler an ally of yours, or is he neutral, or how do you view that?
Well, we can't comment on, speculate on kind of regulation, but we are engaged. We want to make sure that any policymakers in the U.S. or abroad have the best information possible, and particularly our role as an independent provider, a transparent provider of indices and benchmarks.
Okay, Tom, let me bring you in and talk a little about here. I want to talk about some new innovations, but I want to ask you one question. Gensler wrote a book, Tom, about 10 years ago called The Great Mutual Fund Trap, where he advocated for passive investing, in which he said day trading is one of the 4 dumbest ideas in human history. It seems to me like Gensler would be an ally here for the whole indexing business. You got any sense of that?
I think so, absolutely, Bob. And everything that Dan's saying is right. I mean, when you think about $9 trillion in ETFs now globally and built on the back of traditional indexes. But today, when you think about modernization and innovation, I think Gary Gensler's a big fan. I mean, you take crypto alone, and I know you talked about that earlier. I think he wants to see crypto-related ETFs, but he wants it on his own terms. When you think about areas like futures, where he came from the CFTC, makes a lot of sense. He also gave guidance for a 1940 Act structure, which is the most time-tested structure as well. So I think he wants to compromise. I think he likes innovation as well. And with continued innovation in areas like thematics, we need innovation in fixed income. There's nothing but upside from here, Bob.